Okay, it's Monday, 16/10/41. And just getting into it. About to start marking up. So just looking at the 5-minute. Had a bit of high volatility there this morning. Started to die off a little bit. The Australian Open, Tokyo Asian Open went up here as high as 12-ish. Went down to 9-ish. We're currently sitting at 5-ish. Remember, this is an ATR on an 8-period moving average on a 5-minute chart. Currently sitting at 5.54, so volatility's dropped down a little bit. When we're going back to the 1-minute chart on gold, just having a look at what we got. Just move in. About our markups that we use fairly consistently. And we'll go from there. These colours can be whatever you want them to be. It's just my it happens to be my preference where I use them. I use a purple line just to mark out structure. I use blue for what I call a liquidity box. And then I use the dotted purple line to be over and above a zone, so we can just see where we think it's going to feed down to. Red is a change of structure, and major change of structure on a higher time frame. I'll actually use the other red box. I'll use a stronger red box if it's like I think it's worth noting on a higher time frame. So that'd be the 5-minute chart. It's actually a massive wick down there. Oh, got 2 of them, okay. I'll leave them. Might use them later. So look what we got here. I'm just sitting in a flat spot just here. sort of fed back into it just here, looking to make up its mind which direction it's going to go. It couldn't break down any further than there. Got support in there. And to get a bit of a sense of the top of that wick just there to the bottom of there is 60 pips. So we don't really have much of a pattern here. We got a point of origin down here. We don't really have a break to the top. So we really got price consolidating down in this little pocket. It's Monday morning. It's come back to this break point here, which is this point in here. An outside bar, little to no direction. Took that because it broke that previous candle down, broke back out of that little zone there, and it, I missed it. It all but hit that that take profit zone there. Got in here, this candle broke this candle. It's come back up again here. It's got a higher high, and then we go. There's our two 15 pip trades. We're now in front. This one's just hit it again. And we'll see it fill in this little gap over here to the right. we go. And we just settle it for a bit. We're coming back up into a mini liquidity zone. We've got, I don't know, 10 minutes roughly. So now we're in a caution space in here. And then we've got to look further over to what have we got going on over here. I don't want to use this box as it's red, but I can change that box into a blue one. An area there, and I'll use a purple line. That's no good, too much food for breakfast. Put that line just in there. So you can see what I'm doing. I suspect that this area in here we'll need to fill in there up onto that space. So now we've got indecision in here, and market's not fully open yet, so just go and be cautiously. Almost had that probably made 13 pips. And to be fair, slightly earlier on that candle just in there, that would have seen us come home roughly there to there. Then you got 19 pips. Way too late. It hit that box as I suggested. Put that one on up in there. It'll pop up through that. Again, too late. It's hard to get those, they jumped up 30 pips. Come back into that zone there. just quickly see on the 5 minute it's popping up. It's doing the same on the 15 minute. We just started on this particular candle as the beginning of a new 5 minute candle. And there's 4 minutes left on the 15, which brings us to 11 o'clock. So a bit of a gap down there. I think this is going to pop up into there. Your structure's along through here. This is marginal. Down in through here somewhere. That's where it really, you'll go short. And we're still holding on the higher time frames for the minute, so it's still seeking. It'll seek liquidity. That was a little exhaustion candle down, my opinion. So we see what we see here. Okay, got to slow this down a bit. Crack through these. There we go, crack through all of them. This one cracks up, we'll go another long and then sit on it. There we go, keep going. That's it, it'll pop up. Gotta let them breathe. Now it's coming back to that zone. Now settled. Nice. Here we go. Let this play out. That's it. Classic London or Tokyo V. So, going to push up, it'll crack through this in here. And it's just looking for liquidity. Up through there. Stalling again a bit in the top. Looking for a breather back. quick look at the 5 minute. You can see it's starting to push up there. You got your 15 minute, be candle in here, got to break through and get into that zone up in there. Back to our main screen. Another one. This one finished strong. So take our time here. Here we go, come on. Feeding into a bit of a it hits this place up here, it's hollow and it'll just punch up through it. Just struggling to get into it. We'll make it a bit easier, we'll bring everything down to it. Micro zone there. We don't want to see it back there. These two have matched. This one's broken that one. Yeah, slightly higher high, just marginal, few pips. Didn't hold up there, so it's still looking to building its energy, building its momentum. Not ready yet. Came back, found it, pushed straight back up into it. Thanks for coming. Here we go. Beautiful. Again, just looking across, 15 minute looks solid. 5 minute is struggling a little bit in there. In a sense, they pushed down, couldn't push any further, and then they're working their way back up here. Okay, so we got another area of liquidity right across up here. Somewhere into there. You got all that protecting it above it up there. There we go. Smidge further. Let's push it a bit further. Okay, we'll call it there. We'll just check our scoreboard for a second, give it a chance to create and do whatever it's going to do. Sort these out over here. Where am I? So this last bar, this last candle as it sits here has gone 13 pips. Would have thought it would have filled in a little stronger there. So just going to wait till it creates a little bit more of a pattern so we can see where it's going. No need to rush. volatility dropped away a little. It's gone from 9 to, I call it 7, but 6, just over 6. So, in terms of volatility, etc., in my little scale, I'm down to 68% and 41% there. And what that means to me is that 15 pips is a really good target. And just to stay with the 15 pips, you keep nailing them all day, they'll add up. Where you can see it's been up to 50 and higher, etc. So back to the game, play it conservative, taking little bites, little cherries. I'm right up in the block hole here, which is always a dangerous pace. It's either going to pop or it's not. You can see it right up there. And it's, I was trying to get that down a little lower there, but anyway. There is a gap. Interestingly enough, there is a gap between the picture and the price. And so what you see is not really what you're trading, which is a bit bizarre. Get out of those. This can turn here, and when that candle broke that candle, I'm out. Now it's broken the inside candle or the up leg candle. So, just checking the 5 minute, we've come up to breaking this inside lower high in here, which would reverse it solidly. It's broken these in here. So we're looking for a longer day. And then if we go to the 15 minute, it's the same in here. Same place, pretty well. That's the 5 minute, as we just wrote. So 15 and 5 are the same. We got a gap down over the over the weekend. Wholesale market had some fun, gapped down, started. Now we're going to see where we go from here. So we come back down into this box again. There we go. Nice. I want to get rid of those. We don't want it. Oh shit, my email's going to be full of these new ones. I think that should take them off. See what happens there. So now this is interesting because we've got a little reversal playing out here. This one couldn't break the top of that one. So we got that on there. Didn't make that. See on the 5 minute, we've got a couple of wicks up here now have formed. But will they live into it? See exactly played into this area in here, gone up and done it again and rejected it. So it's looking for liquidity to fill. If anything, that's a sell. Now we've got an outside, almost an outside bar, certainly broken the bottom. I'm going to try and apply a bit of patience here. If it cracks that, we'll go short. just not going, and there's nothing there. So we will wisely exit this trade, and that's why. There we go, keep going, keep pushing. That'll do. Take them. Wow, they still gave us 16. Oh no, 212 peppers. Oh, okay, we'll take that. Smart move, get out. Now we've got to wait. In the meantime, we'll try and turn off these alerts. I don't want that. Apply. Price alerts. Maybe that one. We'll get to see in a minute. Anyway. Very much looks like it's going to break north, but now we're caught because we've got price consolidation. We've got slightly uptrend here into the price consolidation. It can just as easily break down. So we're looking for a clear-cut signal, and we haven't got one yet. So we can just do a quick review for a second. So we're looking at maybe, I'm not sure which one we're looking at here. we're currently sitting on $14.32 profit. There's 101 pips, 6.78. That's a 7% return on the $200 we started with today. We're sitting on 44 trades, 29 wins, 15 losses, $2.62 profit, minus $4.11 to the downside, and then we've got 18 pips average win, lost 29 pips, which is 1.2R versus 1.94R. Again, trying to get out of those negatives quicker, but there was a few shorts there early on that probably were not supportive of the game. Okay, again we're getting price consolidation here. Waiting for liquidity, drawing it in from either side. We've had a little tuck down, push straight back up. Now we're caught in this range, that range roughly in between the two red lines, just quick calcs. You're looking at roughly 47 pips in there. So if we were just looking at the bigger picture for a minute, again, what I see is in here, from the open this morning, there's a gap to be filled, and there's potentially big open space in there. But we've got this lot of liquidity in here protecting it. Needs to move through that before we'll see any rise up. Still favouring the long side. You see the overall picture here. Got a bit discombobulated down in here. It was always, in my opinion, it was always going to go. It had a lot to break through to go short in here. Market's not short. So, matter of really picking them up in there. Making hay while you can. Okay, second down candle. That roughly from the top of that candle down's about 27 pips. It wouldn't be unnatural to see it fill into here, sort of come down and then push up that way. That's very possible. So, but if it gets to here, there's nothing to stop it. And keep going too. if it comes down here somewhere. We don't want to be in that. But our volatility now has dropped to 4.8, so it's dropping away. Nice little in-range bottom to top. Happy with that. Like taken from down here and there, now it drops away again. It'll push up to this sort of line up in here, but way safer than doing that up there. You know, you're really starting to get a few top of the range is sitting up there. You can go high, that's okay. Really shaping for a quiet day today. It's already about 11:45. Yeah, 4:44 down in here. And no news to speak about. Got a bank holiday in China, that'd explain a fair bit. You got a Canadian bank holiday coming up, and you got a US bank holiday coming up, and that would also explain a fair bit. So things are going to be fairly slow. 15 pip, we do 18 pips, covers spread, etc. Here we go short in there. Lines have to go below the red one. Interesting. Whether you take it from the top, I wouldn't. I still favour it going long. So I'm trading against myself. Can I scalp a few pips out of it? Well, maybe several times previously I could have. But to me, you could have if you did that. In there, on there. And again, yeah, almost pulled it off. Yep, it's almost there. Yep, there's 15 pips there. But it's a higher risk trade because then you're trading against yourself, and it could pop short too. But then we're not favouring that at the minute. We're not given that. It's got to break there to be in a short structure. It's still in long structure here, and you know, when you go to the 5 minute, we're broken up, we're consolidating up here. Price is really consolidating up in here. You look at the 15 minute, again it's just consolidating on this point where it's breaking. Is it going to break long or short? That's really, is it going to break long? That candle there was roughly 23 pips. You know, that candle over there, 25 pips. That candle there is 27 pips. This candle here from top to toe is 48 pips. That one in there is, from there to there is 54 pips. So our volatility has just really dropped away. I've randomly chosen an 8 pip period, or an 8 period. You go here, I put 8 in here. It's a Fibonacci number. No real reason. I wanted it fairly volatile. I wanted to pick up the volatility in a fairly shorter time frame, not 14, which is 70 minutes. 8 is only 40 minutes. So just in the last 48 5-minute candles, you can see volatility's dropped away. We want it to be fairly responsive, hence why I've chosen 8 for that reading. An average shoe range, just a volatility. It's a simple number. You know, gives you an idea of what your candles are doing, as you can see over here on the this one big one in here on the open. Looking roughly at a gap in there. The gap's 30 pips. So from where it closed, it's 74 pips, and that candle comes down roughly there to roughly there. 216 pips, hence why it started up so high. Measured these little puppies in here and then measured these. Well, the next one, the one next to it, is 149 pips. The next one next to that is 105. The next one past that is 106. So you've got 200, 100, 100, 100, you know, hence why you've got this high here, which is pushed up around about, 11, 12. So marker. So we're just seeing that drop away now as it consolidates, which is not unusual. really, from a weekend conversation, there was something that really stood out. Wrong entries give wrong exits. You get in wrong, you'll get out wrong. Hence, to get in up here, to go long, it's just crazy. To get in up here and go short, maybe. Get in down here to go long, sure, but wait for it to tell you. Let it talk. Let the market talk to you, or I let the market talk to me. So we're looking like it's going to fall away here. It's drawn liquidity from both sides. It's been held across the top. It didn't weaken it. It's still falling away. Do you go short here? No. You got mini micro breaks of structure up in underneath that. Certainly getting ready to. Try it. Probably a little late. Doesn't look strong. You can see it breaking down on the 5 minute there, up in here. 4 cents for all that stress. Wise move. It was pushing into here, didn't break this candle over here, didn't even break that candle there, and it was struggling with a doji on the inside. Now, it might go up a little bit and then come down again, sure, but it wasn't going to push through there. Next candle out, bull candle, is 10 pips, you know, and it's going to feed into that. I'll give it another crack. I really wanted it higher up. But it really is interesting if you think about the time that it comes from the market to us as a nanosecond, but then the nanosecond between the computer seeing the visual and transferring it on into me, so to speak. And then my brain's got to compute it through a few more nanoseconds. And we wonder why the price and the picture don't fully align. It'd be interesting science to sit down and study it one day, but it won't be me that does it. Why is a smarter place to take really sitting up underneath that just there? Will it break it? This is the risk in buying, putting a trade on at short, going short at short. Nothing on the 15-minute. It's just flatlining in there. So same on the 5-minute in here. So by the skin of our teeth, our chinny chin chin, we traded out of that one. Held nerve, thought about it, brought them up and in. Let's just have a quick look at it. It's not great trading. All right, going short in here, thought it was going to keep going. It didn't. Why wait? Why wait for it to come down 42 pips before you go short? No, there's no wisdom in that at all. Okay, starts to rise. Put one in here because I thought it was going to come back, and a couple more in here because it had reached the top. Well, yeah, possibly that they half make sense. They don't really make sense at all. And then it reverses and comes back. And again, get out early, take a few losses, and then just push. So, reassess where we're at. It's going to break. It's clearly gone through these zones. If it hadn't gone through there, I thought it had broken that, but anyway. fuck is this coming from? Fucking hell. Fuck. Close your motherfuckers. That's dodgy ass. Picture doesn't marry up to the screen and the trading. Finally. Journal. Not telling me squat. How do I get that off here? Okay, just want to do a review of where today's trading. I'll just tweak up all my numbers because my mates at Zilla haven't got their shit together as per usual. So what I have to do, and we'll look at Zilla as well in a second. There's been 57 trades, of which I've made 70% success. There's 230 odd pips, but let's get an accurate number of that. And bugger, I'm just looking on another side to my Excel. Here we go, and this is my other measuring chart that I've got to sort it out. So bear with me here for a second. We need to go to the bottom. Add these back onto it. Okay, so just to give you a closer look here, you can see here $32 profit this morning. There's 232 pips. It's 15R. Started with 200. We're at 232, 16% return. 57 trades made, 40 wins. That's 70%. 17 losses. And if you move across this side, you've got $2.42 to $3.77 loss. You got 17 pips average per winning trade. You got 26 pips loss there, so it's 1.14 R with 1.78 R loss. So that's pretty good from having some big losses in, you can see them in here, to much smaller losses, getting on top of losing quicker, and it brings that average down to where it should be. Some good wins in there, 69, 20, 25, 25, 20, 20, 22, in amongst the trading. So the highest trade was a win. It was 69, as you saw there, versus the highest loss was only 40. So again, I'm okay with that in the scheme of things. You've got to really go cautiously. 232 pips. You can see, you've seen the trading here. If we review the trades, this one missed out by 2 pips, so I'm not unhappy with that. Probably a little late on. It should have been little earlier. Would have nailed that as a one up. Couple in here, drove up, put another more on, drove up because it's going into this empty space. So I was pretty happy with that. Again, thought it was going to keep driving. These weren't the best of trades, but again, it's stalled in here, and then you've got the Asian Open, and of course China's not opening, so that, and you got a bank holiday in the US as well, so things are a bit on the slow side. Took a few shorts in here, and then thought it might have kept going. They were too early in. If they had have been in this space just here, that would have been fine. But they were just too early. It hadn't quite broken that base. Got out of them, reversed it, and then kept the longs on the whole time because I just felt strongly it was going long, and then just started chasing longs, multiple trades in there at 15 pips. Another one, let it run longer, more in here, more in here, more in here, which is really what I'm trying to do is put a whole bunch of 15 pip targets on, 18 pips in there. This one, I brought it in a little bit, it would have made it, that's a 5 pip, so from the point of the arrow there, it went up another 13, so it would have made it. This one, pushing again, breaking up into that space. These were buys, probably over enthusiastic in that space. Shouldn't take trades, wait for it to give you the signal to break again. It didn't. Got out pretty quick, which I'm happy with. Broke down in here, returned, broke above here, took that one, 25 pips. This one in here was a sell, thinking it was going to crack on down. Again, it's too low. If we're going to take sells, take them up here, which you'll see over there. Again, 14 pips, got out on that one. Buy in there, 12 pips. Buy in there again, came down, cracked on up, and then, took the 16 pip trade there. It sort of got a bit interesting over here. Just expected it to break down, pushed all the way up. It just wasn't going to drive up through that, had to get through all of this, then into there. So I held those shorts, and each time thinking it was going to come down, it just gave all the impression. Intuitionally, we'd gone too long in here, price consolidating, could not find liquidity to punch above, so it's going to fade out. This went well profit, so I got out of that. Another one in there, short, could have hung on it, would have got there, waited till this pushed up, went short again, perfect. This was a little early. Again, this one broke, got in here, this one pushed back, put a second one on, and away we went. So overall, not too bad, just not happy about that in there. Take that out of it, you're looking at roughly sort of 40 pips losses in there, there's several trades in there, which if you then go to the spreadsheet, I can find the right one. That's these trades in here. So could have done with a lot less of that in there. Would have had a pretty significant impact on the account by eliminating 3 or 4 or 5 of those. So just in that alone, just doing some, quick calculation, that's a $54 loss in there. Got to get out quicker. Just got to keep talking it through. 386 pip loss in there. That's expensive. But the rest of it pretty well went to plan. You can see 15, 17. I got a 15 pip target on. Got out of these, just not comfortable with them. 16, 16, 18, 17, 15. All these are on a 15 pip target. Some of them then I'll move them out a little bit. Got a better position, and then I tighten up on the one that goes with it. 69 held out in that. 18. 25. So overall, pretty happy with all of that. So that's it for today. Give it a rest. It's 12:30. Thank you.